All right. Hey, there we go. So, and you guys can see the life insurance tea time right now, right? That's what you see? Okay,
Mhm.
cool. So for those who don't know me, which you guys all do here, uh, my name is Bob McQuaid. I'm your friendly neighborhood insurance agent, and this is life insurance tea times. So if you have tea, just hold it up. I sent it out in the mail. Not everyone got it.
Cheers.
That's okay. All right. So all right, so the agenda, we're going to go over who I am, who is Protective Life Insurance, and that's the company that we use for life insurance. We're going to go over the why. We'll talk about temporary versus permanent insurance. We'll talk about the return of premium insurance, which is one of my favorites. Life insurance for kids, which a lot of people don't know all the benefits of. I know I didn't. And then life insurance at work. And then finally, we'll just, have a summary at the end. But basically, about me, that's my family right there. That's my daughter. That's my wife. Cool shot of her tattoo here, which is pretty fancy. I'm a licensed insurance agent representing multiple companies with multiple products. I'm a married 32-year-old with an almost 3-year-old. She'll be three September 26th, which is super exciting. Been selling insurance since September of 2021. I've received over 100 five-star reviews across all platforms, Facebook, Google, our Comparion website. It's pretty fun. This is pretty cool. I'm also a fourth degree black belt in martial arts, a professional wrestler, and an improv comedian. So little um, did you know fun facts, which not everybody knows. But that's me. Protective Life. Protected provides protection that fits your life, and this is their actual mission statement. I'm not going to act like I made this up in a fancy way, because we believe everyone deserves a sense of security and freedom. It's who we are and who we've always been, protecting people for more than 110 years through life insurance, asset protection, and retirement products. We do a lot of partnerships with Protective, and they are very big in doing the right thing by people, and they talk about that a lot. They preach that as their mission all the time. I talk to a lot of managers over there, and they're always talking about how we can provide a better product for people, how we can find a better financial solution, a more affordable product. So always good stuff here. But they're a really, really great company that we've been using. Liberty used to have their own company, Liberty Life, but they don't have that anymore. They just use Protective. And it's a cool name because it protects people. So this is kind of sad. I put this in here a couple days ago when this gentleman passed away. So not many, you probably don't know who this is. It's a professional wrestler. He passed away just last week. The reason I put this in here is he was 36 years old. And that was super, super sad. He has two wives, two wives, two kids, and a wife. Um, and no, he didn't pass away because he was fighting. He passed away from a sudden heart attack. So the reason I put this in here, because again, it's really sad. He's 36, and it really hit me because life just can be taken away before you know it. And the words too young don't really exist anymore because it can happen anytime. I mean, it really never existed, but it can happen anytime. September is Life Insurance Awareness Month, so if you see anything, you'll probably see more stuff on Facebook from me, and feel free to share it. But we're going to be talking a lot about it. And one of my biggest points I'm going to try to drive home this year in September is that just too young. It's waiting until you're older, it gets much more expensive. And God forbid you have some sort of medical condition to where you're uninsurable because it can happen like that. Or like this horrible situation, you pass away at 36 with two kids and a wife. I couldn't even imagine. Um, so the why. All right. So what is your why? So think about that for a second. We'll take a pause for just a minute. Think about what your why is, and we'll come back to it. And if you have a piece of pen and a paper, we're going to write it down. Not yet, in a minute, but take a second and think about it. And then you can look at this fun picture of my daughter here, who is a crazy nut. That was at Firebirds, which is a really cool restaurant. It was really good. So what is your why? For me, my why came on September 26, 2020, in the form of a crazy little girl named Sabrina. I knew at that moment I could never leave her in a bad situation. Of course, I want to be around forever, but I can't. And if I'm not around, I need to know that she is not that she's being taken care of financially and will not struggle with any of my burdens, any of my debt, anything like that. I want her to be secure. I want her to be taken care of. And one of the ways I can do that is by providing some form of life insurance, which is exactly why I got it all myself. Um, so that's my why. So what is your why? You, you might have kids, you have a spouse that you don't want to leave with a mortgage or debt, funeral cost, which is there for everybody. Coffin funeral, like an actual burial, I believe costs between 20 and 25,000 or 15 and 20,000. I only have a little experience with that. I had to unfortunately plan a funeral for my dad in 2017, who was he was cremated. So I had a bill about 5,000. So I don't know how much crazier it gets than that, but even 5,000 is pretty awful. Um, so take a minute to write down your why. And if you want to share it, you can come off mute and share. It's only the three of us. You can do so, totally up to you, or just write it down. But I'll give you a second. Oh, I didn't make my funny joke. Or maybe your why is you signed on just to drink your tea with other people. I literally wrote that joke in there and then didn't share it. So
You missed your moment.
I
Ah,
know, I know, I know. I planned, I planned, I took a lot of time preparing these slides too, and I was like, that's going to be a good joke. The best jokes are the ones that are always explained afterwards.
I'm so
All
intrigued
the
by the improv
timing.
comedy, man.
I'll tell you more about it for sure. What'd you say, Rich?
It's in the timing, though.
I know, I know. And unfortunately for me, I was very, very far after the mark. But yeah, so keep thinking about this, guys. There's obviously a lot of reasons for your why, but yeah, so keep thinking about it. Obviously, it's an ever-growing thing, you know? You might it might be kids now, but later on it might be grandkids, or it might be your mortgage now, then later on it might be something else, right? But the funeral, that's something that's always going to be there, right? So just kind of think about that. So temporary insurance is term insurance. So term insurance is used to protect financial burdens that will eventually go away. That they include your mortgage, loans, school funding, taking care of your kids when they're young. Eventually, you're not going to have to take care of those kids as much as you did when they were 4 or 5, right? You're probably not always going to have a big mortgage unless you keep, but
Bob,
maybe
that's
you,
the lie they tell you. That's
right.
the lie they tell you. My kid's in college. I feel like he's more expensive now than when he was 5.
Well, there you go. There you go. All the more reason to make sure you're taken care of, right?
Right?
Um, but but those are so, there are obviously some things that are going to go away. So that's what temporary insurance is for. So these policies are more affordable because they have an expiration date, right? If you have a 15-year term policy, you have it for 15 years and then it's done. There is they do have a renewable feature, but as Rich and I spoke about earlier this year, it gets extremely cost prohibitive. Like not nobody does that unless it's like their only option at that point. There's also a conversion period. There's a conversion option that are built in a lot of these policies, right? For the people who have a term policy, and then they are like, you know what? I would like to put this toward a permanent policy. Just talk about it in a minute, but you can actually convert it, in which case they only take into account your age at the time, not any kind of medical conditions. So if you buy a term policy when you're 40, you get diagnosed with something when you're 41, you decide to convert your life insurance at 42, the diagnosis does not matter. You pay for the same rating that you had when you were 40, or sorry, the same medical rating you had when you were 40, but you just add on it's called attained age. You're 42 now, but the diagnosis does not matter. And that's why term insurance is really important to get locked in as early as possible before anything happens in terms of health. Especially, guys, we live in a COVID world, or we did, and it's who knows what's happening now, but which I can't even believe I'm saying. Uh, who knows what's going to happen health wise, right? Permanent life insurance, that's also called whole life. Whole life insurance is permanent. People use this insurance for the financial hardships that will never go away or go away much, much later in life, such as replacing an income or paying for a funeral, right? Whole life is typically more expensive because it never expires. And in most cases, the premium never increases. If you buy a whole life policy when you're 40 and you get diagnosed with something when you're 45, you still have that whole life. The price does not go up. Because of that, it's usually more expensive. And a lot of times, pretty decently more expensive because it lasts your whole life. It also has cash value, which is a living benefit. It's actually built into the policy. So a lot of times when you have a whole life policy, the money that you're paying into it is also building up over time, which you can use as we call a living benefit. If you have your death benefit of 50,000 and you have 20,000 of cash value in that policy, you can actually take out all 20,000. Just keep in mind it reduces that death benefit to 30. So you can't have both a living and a death benefit, but a lot of times when people have a higher death benefit, expenses are dwindling, right? Maybe you buy a high death benefit for a mortgage and your mortgage is 500,000. It's not always going to be 500,000. Eventually it'll be 3, 2, and 1, and you might be able to use some of that extra death benefit as your cash value. Any questions so far? Everything kind of going pretty smooth. Awesome. Return of premium. Now, this is the one that nobody knows about, really. Why? Because nobody advertises this except insurance agents, right? But it's really a cool feature. So, a return of premium life insurance policy, it's a product that will cover you for 25 years. It's like a 25-year term. Here's where it's kind of crazy, right? And you can see by my little picture spoiler here. If you don't die in those 25 years, you get all of your premium back in one lump sum. However much you paid into that policy, boom, it comes back. Here's the thing though, because you're getting it all back, it's kind of a catch-22. It's more expensive because they know you're going to pay, they know it's going to be paid back, and it's a little bit more of a premium product. The good side is it's more expensive, which means you're getting more back at the end of it. So that's a really cool one to kind of show people. A lot. It's a super popular product this year, but yeah, so it actually just pays you back. So it's a great way to have a term policy. Plus, also, if you're like, well, I'm not sure if I'm gonna, I'm still pretty young. I might not die in 25 years. I got some income to use on this. I'm gonna put it toward that policy. At the end of 25 years, you get that check, which you could then put away for a funeral and have the rest yourself. So really cool. It's a fantastic alternative to a term product that simply expires. Doesn't expire after that, but you get all of your money back that you paid into it. Life insurance for kids. That's my little one. So my daughter's had a policy since she was 6 months old. 2 reasons. One of the reasons was because I got the commission on it. So I tried to think of how to do that. But obviously I wouldn't just do that just for that reason, right? Because ultimately it doesn't make sense. Eventually I pay more than I get in the commission. But my daughter's a policy. So this policy not only grows cash value, it acts as a forced savings account. So she's not only building in that cash, not only building in that policy, she can use it. It provides coverage for her entire life. What she has is called a 20-pay whole life. I pay about $240 a year for the whole year. I do that for 20 years, the first 20 years of her life. And then she, at the end of that 20 years, I don't pay another dime. And she has that whole policy the rest of her life. So she then has $20,000 of death benefit. So she, at the very least, already at the age of 3 almost has a funeral covered for, I am praying to God, 100 years in the future when she needs it. So the policy paid off by times 21. She will have life insurance entire life. We talked about that here. So she have guaranteed funeral lease paid for. Here's the best part. It's called a guaranteed insurability rider. Okay. This rider, which my daughter has on her policy, will guarantee that she can purchase up to 20,000 in additional life insurance at 7 ages in her life. It's like every 3 years beginning at age 20, I believe. So it's like 20, 23, 26. So she can do it. She can so these additional 20,000 policies will only take into account her age. Here's where it gets kind of crazy. Let's say, so she has this policy now. Let's say at age 14, knock on wood, and this actually happened to my boss, my manager, my old manager, this happened to. His kid got diagnosed with diabetes at age 14 years old. So he has this on his policy. Diabetes isn't impossible, but it makes things difficult for insurance, for life insurance. It makes it hard, and it definitely makes it more expensive. So here's the scenario. My manager has this policy. His kid gets diagnosed with diabetes at 14 years old. His kid can still purchase life insurance at age 20 and doesn't And that life insurance is not going to look at his diabetes at all. They're only looking at his age. They're saying, okay, this person who we have to look at as this, what's the word I'm looking for? Medical, as this class, as this rating class, because that was the age when the policy was bought, we can only look at his age. So instead of being either A, uninsurable, or B, way more expensive because he has diabetes, doesn't matter. So that is one of the most powerful things I saw. So that's one of the things I tried to preach a lot in the last year because I saw it happen, right? His kid literally got diagnosed at 14 and would have made it really, really hard. So definitely think about that for anybody, who has kids, obviously it's a little hard to talk about life insurance for kids, but that was something that made me be like, okay, I need to get something for her, and that's when I actually bought it. So yeah, that's something that not a lot of people know. Employee life insurance. This is the biggest thing I get. Hey, hey, we work with life insurance. Do you think I could talk to you about that? Oh no, I have it through work. Oh, my employer doesn't. I pay $1 a month. I hear it all the time. So first, it usually only covers 1 year's worth of your salary. So if you look at your salary or your spouse's salary, how long would you survive if you got that? Probably not super long, right? So that's something to think about. Number two, it's not portable. If you leave your job or if you leave this job, the life insurance isn't going with you. And some companies do have a portability option, but most people can't take advantage of it because it's too cost prohibitive. So they have it there, but you can't do it because it costs too much money. So a lot of times when people leave their job, that's it. You don't keep your policy and you're not in control. If your employer decided to terminate coverage, you're out of luck. So that's why I tell people it's so important to own your own policy. Just a couple additional things. It increases in price every year. Here's something I didn't know until a couple weeks ago, which is also really important for people who are so tax conscious. If you have anything over $50,000 in coverage through work, you also get taxed on that as imputed income. So it's not usually as cheap as people think. A good analogy, a work policy is like the cherry on top of your life insurance sundae. So think about a sundae and the cherry on top is the life insurance through work. It's good that you have it, but you would never just eat the sundae. You would never just eat the cherry. That's not a very good sundae, right? So we're almost done, guys. I really appreciate you being here. And if you're watching on the recording after the fact, thanks for watching. So here's what I want you to do. Take out a pen and paper, and we'll just spend a minute on this. Doesn't have to be perfect, but write down anything and everything that you can think of that your spouse would be responsible for themselves if you were to, knock on wood, unexpectedly pass away. These would include schooling for kids, mortgage, car payments, debt, bills, subscriptions, food, insurance, etc. Take 1 minute to try to figure this out. Doesn't have to be exact. Try to get to some exact number, even if it's not necessarily the actual final number. Rich, is that your cat? Oh, I think you're on mute.
Yeah, that's one of my fosters. She's up for adoption. She's the one that's FELV positive, so she's in my office.
Okay.
I have to isolate her from our other cats.
Nice. Nice.
I haven't been working from home that much lately, so she's
Yeah. Nice.
liking the attention.
Of course. Of course. Sometimes I'll bring my dog in the office, not the office, but my at-home office here, and he'll just kind of sit over there for me, even though I tell him, "Hey, I want company. Come here." He doesn't like being over here. Um, the only other part, guys, is now think about how long your spouse or partner or family could survive with a bill like that, right? If you were to pass away and it's $200,000 or however much, right? How long would they have with what they get? If they get any kind of life insurance through work, great. That's a part of it, of course. But it's just not, it's so much more than that. And as we're finishing up and as you guys are finishing that exercise, you insure your cars and you insure your home, both of which could be replaced. We talked about this earlier. Your life can't be replaced. Life insurance policy is more than death protection. It has benefits that could protect your finances and your family while you're alive. Don't rely on an employer to protect the most important thing, your family and your life. And there's just some more pictures that I shared earlier. Protective life. And thank you. That's it, guys. That is the end of my show. All right, so I am going to stop our recording here.